Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 5th of April. All right. Now, it's been one of those sort of tricky weeks where there's been plenty of data coming out, not really going the way of the recent trends. So it makes it a little bit tricky. Now coming into the like Thursday's trading, especially ahead of the non-farm payrolls, it's predominantly the market sort of stalls and waits for this major release, especially when there's not much coming out on Thursday. And this has been pretty much the case today or this week. And it really comes back down to looking at the overall core market drivers. Once again, we are stuck in this rut where Brexit and the China-US situation is still simmering in the background. So when your core market drivers are geopolitical, it's not uncommon to have, the market conditions. Well, the majors are just drifting sideways. If anything, dollar yen has just poked its head up above resistance above 111.60, and that's also a break on the daily charts as well. So dollar yen, even though it's just moving very, very quietly, it does look like it's ready to move to the top side, with the other major pairs all pretty much stuck in the mud where they were. Now, this is where we come back down to really focusing on where the next major move is going to come from. Well, obviously, this is where you turn to the fundamentals and the economic calendar. Now, German industrial production numbers, we had the German factory orders out yesterday, minus 4%. Really weak numbers. The euro didn't move a hell of a lot. We did have the ECB monetary policy meeting accounts, so not much out of that either. But growth is really stalling in the Eurozone, probably more than it was before. So these German industrial production numbers, if they're weak, it may be the straw that breaks the camel's back, and we may see euro dip below 112, the figure again after these numbers. So keep an eye on that. It is a blue release, so you can actually just hold positions and trade straight through it. Then this is where the action is going to be. Every month or every couple of months, we do have the Canadian and US employment numbers released at the same time. Now, what generally happens, and I don't want to upset my northern friends up there in Canada, but the market generally sort of pushes aside the Canadian numbers and focuses on the US employment numbers. That's the big one, right? And primarily because it impacts all the major pairs, right? So that's where most people are focusing. Now, dollar CAD obviously is going to be a bit of rough and tumble. This is always the case because you've got the US numbers coming out at the same time as the Canadian numbers. So what you can end up with is a real basket case. Now, say, for instance, the US numbers are strong, right, and the Canadian numbers are also strong, well, then dollar CAD doesn't move much. But on the same instance, if we get a situation where the US numbers are strong and the dollar CAD numbers are weak, well, you're going to get a hell of a move on dollar CAD. So just be aware, volatility on dollar CAD is extreme on these events when the two employment numbers do come out together. So, just take it easy. There's 3 or 4 variables that come out at the same time. It's not as easy as just like a CPI number where it's out by itself. You've got the non-farm change. You've got the unemployment rate, the average earnings. There's a few other breakdowns as well. So just be aware, this is a big number that can impact all pairs, but trading it on the release can be problematic because you could get one component strong, the other component weak, and you see a 50-point spike up, 70-point spike down. It flushes the market out. After about a minute, you should actually have a pretty good understanding of what the numbers are and where the potential impact is. Now, for me, this is the way I sort of look at it as well. You come back to the major currency pairs, right? You're looking for the pairs with the best technical setups to trade around these numbers. Now, Kiwi's got a pretty good base or numbers both sides of the market. The Aussie, probably top side, looks like a better potential move. Euro, see how Euro's is drifting sideways here? Now, this is potential to go sort of up or down in my eyes. There's a big level down here around 111.75.80 on Euro. Now, so we get really strong numbers. It has to punch through there. If we get weak US numbers, Euro is just going to drift back towards 113 and park itself there again. I'm not going to worry about sterling with Brexit sort of dominating. And as you can see here, dollar CAD, technically it's a little bit of a mess. Oil's at $62. Dollar CAD at the moment is doing exactly what it wants to do, which is no rhyme or reason. So just bear in mind, US and Canadian numbers coming out at the same time. It does look a little bit of a mess. To me, dollar yen, okay, strong US numbers, it looks like potentially the best pair. It's breaking higher on the hourly and daily charts, and that could be the potential best trade. And that really comes back to isolating the pair which has sort of clear direction at the moment, and that is dollar yen. So just go through your major currency pairs, work out where, if you've got clear direction on any. To me, it's only dollar yen. And then we can go from there. So, of course, if we do get strong, if we get weak German numbers, all right, and we also get strong US numbers, a combination here, then you've got to expect euro to be breaking down through, definitely down through 112. So that's a good opportunity there as well. So to me, dollar yen, euro, probably the two best potential pairs at this point. But we do need the numbers to drop for us. We need weak German numbers to give us that little bit of edge on the downside in euro, and we need strong US non-farm payroll numbers across the board to give the US dollar a real shove to the top side, and that'll push euro down, dollar yen to the top side. All right, guys, that's it from me. We'll see you in the 247 trade zone. All the very best. Cheerio.